Ending losses in the final hour of trading, stocks closing near session lows as oil settles below zero for the first time ever. Unbelievable. I'm Melissa Francis.
I'm Connell McShane. Welcome to After the Bell. Unbelievable indeed. So we'll talk a lot about oil. The Dow ends up lower by, about 2.5%, dragged down by Boeing and, of course, Exxon, which makes a lot of sense. The S&P and the NASDAQ not down as much, but the S&P does close 1.8% to the downside. Fox Business team coverage of all of this. Phil Flynn is the man of the hour watching all of the oil action for us. So we'll get to Phil. Lauren Simonetti on the stock market. Blake Berman, latest coming out of the White House. Edward Lawrence will have more reporting from Washington. But like I said, Phil, you are the man of the hour in that market. So it's like, you've been doing this a long time. You never saw a day like this before, right? Take us through it.
Never in my life. And of course, there's a lot of people that have been watching this market that never thought they'd ever see a day like this. We had this perfect situation where you have a situation where this contract's coming to delivery with no demand. And there's somebody out there right now that wants to sell oil, and there is nobody there to buy it. In fact, this is the first time we've ever seen this kind of situation, Connell, and it could be a short-term situation because you look at some of the back months in the price of oil, they're still relatively strong compared to the front month, but this is a disaster. It's a disaster because OPEC didn't act fast enough to cut production. It's a disaster because U.S. producers didn't pull back fast enough, and it's a disaster more than anything because this is a snapshot of what the world looks like when it stops, when economic growth grinds to a halt. And I think when we look at the historic nature of the WTI contract, sort of being like an economic barometer of the world, we're seeing what the world looks like when it stops, and that's a negative price for crude oil.
Now, you use the term snapshot, Phil, and that might be the most appropriate term we could use on a day like this. And I want you to talk a little bit more about the value of crude oil. I mean, because it's so strange to see it up there that, it's gone negative at $30. But to your point, that's the May contract for May delivery. Now, if you look at crude for June delivery, which I believe is the more actively traded contract, right? We're at $21. Right. So what does that tell you about the value of oil?
Well, it's telling me that there's hope that we're not going to repeat this process again in the coming months, that there's an expectation that we'll see a drop in production because of the OPEC cuts, a drop in production because U.S. producers are pulling back, and hope that the global economy is going to slowly get back to normal. So we're seeing hope priced in some of those back month contracts. But that doesn't do anything for where we're at today and in the next 24 hours. Right now, refiners are running at very low rates because there's no gasoline demand, so they're not buying oil. A lot of the storage facilities are getting full up, so they're not buying any more oil. And so the other thing that you're seeing here with today's market is a snapshot in time where the buyers are basically being paid to take this extra oil off the market. That won't go on forever. We're going to see economic growth go back up. We're going to see production fall back, but it's ugly right now.
It's ugly to say the least. Unbelievable to see those numbers on the screen. Thank you, Phil. Lauren Simonetti watching how the stock market reacted to all this today. Lauren?
Well, not good. Connell, we closed right near the lows of this session. And just to give you perspective, for the Dow and the S&P 500, coming off 2 strong weeks for the stock market. So starting this new week firmly in the red, Dow down 592 at the close. I was about to tell you that the NASDAQ was the outperformer with companies like Netflix and Amazon near record highs, but that's not the case. The NASDAQ also finished right near the lows of the session today, too. I want to show you this intraday picture of the Dow Jones Industrial Average because you can see right around 2 p.m. when the price of oil started to free fall, there it is, the market started to come down a little bit more. Look, as Phil said, there is no one's using the oil, and there's also no place to store the oil. That's a big problem if you look at the dynamics of the market. On the Dow, Exxon and Chevron weighing sharply, contributing at least negative 40 points to it. The drillers got killed today. Marathon, Occidental down in a big way. But also, take a look at this. Halliburton shares. This is one of the nation's biggest suppliers of oil equipment to the oil industry. It finished higher The price of oil is in free fall, yet Halliburton shares are up 2/3%. Here's why. They announced cost cutting. So we really are living in this crazy market. Another part of the market that has to do with oil that surged today was the shippers. You have these big super tankers sitting, at sea with millions of barrels of oil on them. And look at the reaction. TK up 20%, Scorpio tankers up 18%. So that's some green on the screen for you. One thing to note, though, as we talk about oil, Connell, and as I send it back to you, is it's expensive to turn off a well, for instance. And as we look at the other side of this pandemic that has ground the economy to a halt, and we look at a recovery when we will need oil again, we might not be in a good situation because we've effectively shut down supply. Just something to consider as we consider recovery. Back to you.